Hello, hi guys. This is Balakrishna from Lecturepedia.in. How are you? Hope you people are doing well. Even I am fantastic. In the previous class, we have discussed SEBI Act, right? Now, in the today's class, we will be starting with the regulations that have been issued by SEBI. In the previous class, while starting SEBI, I have told you that there are four types of regulations of SEBI that are applicable to our syllabus. In the today's class, we will be covering LODR regulations. Okay. Now, what are these LODR regulations? The full form of LODR regulations is listing obligations and disclosure requirement. See, in the previous class itself, I have told you that SEBI will regulate the capital markets, right? So, as part of that, SEBI has issued LODR regulations. Okay, there will be various rules that will be present in this LODR regulations which have to be complied by all the listed entities. Okay, if your company is a listed entity, then you should comply with all the regulations that are prescribed in these LODR regulations. Hope that is clear. Similar to LODR regulations, we are also having another type of regulations, that is ICDR regulations. ICDR regulations, the full form is Issue of Capital and Disclosure Requirements. This ICDR regulations, we will be covering them in the next class. Okay, but you have to understand the difference between LODR regulations and ICDR regulations. ICDR regulations has to be complied by the company before listing its shares on the stock market. Okay, in order to get your shares listed on the stock market, before you get your shares listed on the stock market, you need to comply with this ICDR regulations, that is Issue of Capital and Disclosure Requirements. From the point you have listed your shares on the stock market, from that point onwards you have to comply with LODR regulations, that is Listing Obligation and Disclosure Requirements. Hope that is clear. See, SEBI Listing Obligation and Disclosure Requirement, shortly we will call them as LODR regulations. Now, these LODR regulations are applicable. See, regulations to be followed by entities who listed their shares on stock exchange. Okay, these LODR regulations are applicable to only listed entities. Okay, for unlisted entities, LODR regulations are not applicable. That means whatever we are going to discuss in these regulations, you have to remember that all these are applicable only to listed entities. Okay. Difference between ICDR and LODR regulations. ICDR regulations are pre-listing requirements. That means company, before it gets its shares listed on the stock market, it needs to comply with ICDR regulations, and after the company get its shares listed on stock market, from that point onwards it needs to comply with LODR regulations. So they are known as post listing requirements. Okay, pre-listing means before listing, post listing means after listing. Okay, next, applicability of LODR regulations. Okay, to which companies this LODR regulations are applicable? Broadly speaking, for listed entities, LODR regulations are applicable, but there is a specific applicability that we'll discuss now. See, specified securities that are listed on main board, SME exchange, innovation growth platform. Basically, in the stock exchange, there will be three platforms. One is main board platform, that means the actual platform on which the company's shares will be listed. Okay, that is main board. Next, SME exchange. Okay, SME exchange is for small and medium enterprise companies. Okay, small and medium companies, they can list their shares on this SME exchange. That is one platform that is available on the stock exchange. And another platform is innovators growth platform. That means new companies, new startup companies which are innovative companies, which are working in various innovative ideas, can list their shares on this innovators growth platform. Okay, so if the company has listed any of its securities, the specified securities on any of these three platforms, then it needs to comply with LODR regulation. Next, non-convertible securities. Okay, if the company lists its non-convertible securities, they can be non-convertible debentures or non-convertible preference shares, whatever the security might be. If it is a non-convertible security and it has been listed on the stock market, then for such a company which has listed its non-convertible securities on stock market, for such a company, LODR regulations will be applicable. Next, IDRs. What are these IDRs? IDR means Indian Depository Receipt. Now, if any company has listed its Indian depository receipts on stock exchange, then for such company also LODR regulations are applicable. Now, what are these Indian depository receipts? Let's say, for example, there is a USA based company, let's say Netflix. Okay, Netflix is US based company. Now, this company wanted to raise money from Indian public or from Indian stock market. Now, since this company is a foreign company, it cannot directly issue its shares to the Indian public, or it cannot directly list its shares on the Indian stock market. Okay, so what this Netflix will do is, in India, we are having depositories, right? In the previous class itself, I have explained you. There are two depositories, NSDL, CDSL. Now, Netflix will deposit its shares with either NSDL or CDSL. Okay, Netflix will deposit such a number of shares which it wanted to issue to the Indian public and raise the money, or which it want to list on the Indian market and raise the money. Okay, that many number of shares Netflix will deposit with either NSDL or CDSL. Let's say it has deposited the same with NSDL. Now, NSDL, what it will do is, backing these shares of Netflix, NSDL will issue Indian Depository Receipts, that is IDRs. Okay, NSDL will sell these IDRs backed by the Netflix shares to the public, to Indian public. Okay, now public, by purchasing these IDRs, they will give money to NSDL, and the same money NSDL will give to Netflix. Okay, hope you understood. Netflix, it wanted to raise money from Indian market, but it cannot raise money by directly listing its shares in the Indian stock market because it is a foreign company. So what it will do, it will deposit its shares with NSDL, and on behalf of these shares, NSDL will issue Indian depository receipts to the public. Now, once the public purchase these Indian depository receipts, they will give money to NSDL. The same money NSDL will give to Netflix. Okay, so this way Indian depository receipts got generated. Now, these Indian depository receipts, they will be listed on stock exchange. Okay, so these IDRs belongs to Netflix, right? Since Netflix has listed its IDRs on Indian stock market, Netflix should comply with LODR regulations. Hope this is clear. Next. Securitized debt instruments. What are these securitized debt instruments? Let's say, for example, there is a company, let's say Paytm. Now, Paytm is having various debtors, or you can say receivables of some 1000 crore rupees. Okay, Paytm in its books of accounts, it is having debtors worth 1000 crore rupees. Now, these debtors, they will give the money to Paytm at various times, okay, based on the credit period. Okay, it will realize these amount from the debtors in future, but as of now it is just having these receivables in the books of accounts. Now, Paytm, it is in need of money. Okay, let's say it wanted money. Now, what Paytm can do is, Paytm can approach a particular company whose business is to purchase the receivables and convert them to, security deposits and raise money. Okay, we will be calling them as asset reconstruction companies, ARC. Okay, asset reconstruction company. Now, Paytm can approach asset reconstruction company. Let's say, for example, these receivables, they are, they are on the books of accounts of Paytm for a long period of time. They are not giving money to Paytm. Okay, so what Paytm will do is, Paytm will sell these receivables to asset reconstruction company. Okay, so it will sell 1000 crore worth receivables to asset reconstruction company at 950 crores only. Okay, at 950 crores only. Why? Because Paytm is not able to realize this amount. Since it is not able to realize this amount, it is selling all these receivables together at some lesser price to asset reconstruction company. Okay, now asset reconstruction company has to pay 950 crores to Paytm for purchasing these receivables. Now, what this asset reconstruction company will do is, asset reconstruction company will create securities that are backed by these receivables, and asset reconstruction company will sell these securities to general public. Okay, now the value of these receivables is 1000 crores. Okay, for these 1000 crores worth of receivables, it will create a securities. Okay, and the value of each security, it can keep either as 10 rupees or 100 rupees. Okay, if it keeps the value of security as 100 rupee, then 10 crore number of securities will be generated. These 10 crore securities, they will be sold to the public, and from public, asset reconstruction company will take 1000 crores. Okay, of these 1000 crores, asset reconstruction company will pay to Paytm 950 crores. Okay, so now asset reconstruction company is having 50 crore rupees, and also asset reconstruction company is having these receivables. Now, asset reconstruction company will realize these receivables. Okay, it will approach each and every borrower and it will collect the amount from the borrower. by reconstructing their debt. Okay, it will give some exemption. Okay, let's say a particular borrower has to pay 100 crore. Now what asset reconstruction company will say is, okay borrower, you have to pay 100 crores, right? I am waiving off 5 crores, you pay me 95 crores. Okay, like this, by reconstructing the debt, asset reconstruction company will realize the amount from the receivables. Okay, let's say of the 1000 crore rupees of receivables, asset reconstruction company has realized 980 crores. Okay, now if you see, asset reconstruction company has earned 980 crores plus 50 crores, that is 1030 crores. That means it has made a profit of 30 crores. Now what this asset reconstruction company will do is, it will distribute this 30 crore profit to the people who have purchased securities, and it will also repay the amount of 1000 crores that it has taken from the public. Okay, now in this process, what has happened? Securities, okay, certain type of securities got generated. Okay, these securities will be known as securitized debt instruments. Okay, securitized debt instruments. Hope that is clear. So if those securitized debt instruments are listed on stock market, then also that particular company which has listed securitized debt instruments must comply with LODR regulations. Here if you see, why we are calling them as securitized debt instruments, these securities are generated on behalf of these debt instruments, on behalf of these receivables. So we are calling them as securitized debt instruments. Okay, this debt has been converted into securities, and you listed that securitized debt instruments on the stock exchange. Okay, hope you understood. Next, security receipts. Okay, even these security receipts are also one type of securitized debt instruments. And units issued by mutual fund. Okay, if you have listed any of the units that are issued by mutual fund, then also you need to comply with LODR regulations. Next, any other security as may be specified by the board. Okay, in future, if SEBI specifies that, if SEBI specifies any other security, then also you need to comply with LODR regulation if you have listed such type of security on the stock exchange. Okay, this is the applicability of LODR regulation. So to put it shortly, LODR regulations are applicable to those entities which have listed these type of securities on the stock exchange. Next, now coming to the regulations. Now if you see, LODR regulations, they can be divided into two parts. Those regulations that are actually given in the body of the regulations, that are, okay, substantive provisions incorporated in main body of regulations. Okay, these are the actual regulations that are given in the body of the regulations, in the form of regulation 1, regulation 2, regulation 3, like this. And procedural requirements in the form of schedules to the regulations. Okay, and any other procedural requirements, the SEBI has kept all the procedural requirements in the schedules to the regulations. Hope that is clear. Now, starting with regulation 17 with respect to board of directors. Now, from now onwards, you will find various rules and various compliances which have to be followed by listed entities. Now, regulation 17 speaks about board of directors. Now, whatever is specified in this regulation 17 must be followed by listed entity. Okay. Basically, regulation 17 deals with composition of board of directors. That is, how many board of directors must be present, how many should be independent, how many women directors should be present. Okay, these aspects will be dealt in regulation 17. See, now another important point. If you see in Companies Act also, in Companies Act 2013 also, there are various aspects with respect to the company. If you see directors only, okay, in the first chapter, appointment and qualification of directors, we have seen various requirements with respect to the director. There should be one woman director, okay, there should be managing director, whole time director, okay, all these aspects we have seen. Okay, there should be minimum 2 directors. Now the requirements of Companies Act are applicable to all the companies broadly. Okay, whereas requirements of LODR regulations are applicable to only listed entities. Now, listed entities, they have to follow both Companies Act as well as LODR regulations. Hope that is clear. See, now the first requirement. In the board of directors of a listed entity, there should be at least one woman director, and not less than 50% of board of directors shall be non-executive director. Okay, we have already discussed all these terms in the Companies Act itself. Okay, while discussing the provisions related to directors, we have discussed what is woman director, who is non-executive director, who is executive director, all this we have discussed, right? So listed entity should have at least one woman director, and at least and not less than 50% shall be non-executive director. Hope that is clear. And top 1000 listed entities should have at least one independent woman director. Okay, now top 1000 listed entities means you have to calculate this on the basis of market value of share capital. Okay, those listed entities which are top 1000 on the basis of their share capital, they should have at least one independent woman director. Okay, top 1000 listed entities based on market capital. Hope that is clear. Next, number of independent directors. Now in case of a listed company, how many independent directors has to be there? That will depend based on the chairperson, who is the chairperson of the board of directors. Based on that, the requirement of independent director will change. See, if chairperson of board of director is non-executive director, and such non-executive director is not a promoter of the company. Promoter means the person who has started the company. Okay, so the chairperson of board of directors is non-executive director, and such non-executive director is not a promoter of the company. In such a situation, at least 1/3 of board of directors must be independent director. If in case the non-executive director who is chairperson of board of directors is a promoter or related to promoter of the company, in such a situation, at least half of the board of directors must be independent director. Okay, and the same will be the requirement even if the chairperson of board of directors is other than a non-executive director. Okay, in such a situation also, at least half of the board of directors must be independent directors. Hope that is clear. So how many independent directors should be there in the board of directors is dependent on who is chairperson of the board of directors. Okay, if chairperson of the board of directors is non-executive director and he is not a promoter, then at least 1/3 must be independent director. If non-executive director who is the chairman is also the promoter or related to promoter of the company, then at least half of the board of directors must be independent director. And if the chairperson is other than non-executive director, then also half of the board of directors must be independent director. Hope that is clear. That is the second requirement. Next, board of directors of top 2000 listed entities must have not less than 6 directors. Okay, there should be minimum 6 directors in case of top 2000 listed entities. Okay, top 2000 listed entities based on market capitalization. Again, here also Okay. Next, age limit 75 years. Okay, you cannot appoint a person who is more than 75 years as a director of the company. However, by passing general meeting special resolution, you can appoint a person who has more than 75 years of age as a director of the company. Next, board meeting. At least 4 board meetings must be conducted in a year, and maximum gap should not be more than 120 days. Okay, sorry, maximum gap should be 120 days. Next, quorum for top 2000 listed entities. See, the quorum in case of top 2000 listed entities, quorum means the minimum number of directors who have to attend in order to start the board meeting. It is 1/3 or 3, whichever is higher. Okay, and it should be including at least one independent director. Okay, at least one independent director must attend the board meeting in order to start the board meeting. Hope that is clear. And the quorum is 1/3 of the total directors or 3 directors, whichever is higher, including at least one independent director. Hope you understood. Next, regulation number 17A, maximum number of directorships. Okay, maximum number of directorship means maximum how many directorships a person can hold. Okay, let's say I wanted to appoint as a director of a company. Okay, now I, being a individual person, in maximum of how many companies I can be appointed as a director? The answer is 7 listed entities. See, this is only for listed entities. Okay, here we are not speaking about private limited companies. Okay, LODR regulations doesn't speak about private limited companies. Okay, the maximum listed entities in which you can be appointed as a director is 7 listed entities. Okay, in the Companies Act also there is a separate requirement with respect to the maximum number of directorships that will include private companies also. Okay, here we are speaking only about listed companies. Okay, next, if you are acting as managing director or a whole time director in any of the company, see, Mr. A can be director in maximum 7 listed entities. Now, if Mr. A is acting as managing director or whole time director in any one company, okay, in at least any one company, if Mr. A is acting as a managing director or whole time director, then in such a situation, Mr. A can be director of maximum 3 listed entities only. Okay, why? Because if you are managing director or whole time director, you have to spend lot of your time in that company because you will be involved in day-to-day management of the company. Since you are managing director or whole time director of a company and you are spending lot of time with that company, you will not be having much time to act as directors of other companies. So in such a situation, you will be allowed to be director of maximum 3 listed entities only. Okay, if you are not managing director or whole time director in any company, then you can act as a normal director in up to 7 listed entities. Hope that is clear. See, if the person is managing director or whole time director, then independent director in maximum 3 listed entities only. Next, regulation number 26, number of memberships. Okay, memberships of what? Memberships of committees. Now, in the company, there will be various committees. Now, here regulation 26 speaks only about 2 committees. They are audit committee and stakeholder relationship committee. Okay, now a person can be member of maximum 10 committees only. Okay, and these committees include only audit committee or stakeholder relationship committee. Okay, there are also other committees: nomination, remuneration committee, risk management committee. Okay, the membership of those committees will not be considered for calculation of this maximum memberships. Okay, you can act as member of n number of risk management committees. You can act as member of unlimited number of nomination and remuneration committees. Okay, The bar is only on audit committee and stakeholder relationship committee. Okay, you cannot act as a member of more than 10 committees. Here committees include either audit committee or stakeholder relationship committee for the purpose of this regulation. Next, chairmanship. You can act as a chairman of maximum of 5 committees only. Okay, and this includes all the public limited companies also. Okay, not only listed companies. Okay, all the public limited companies. Okay, the chairmanship or memberships in the committees of all the public limited companies will be considered for the purpose of regulation 26. Hope that is clear. And exclude private companies, foreign companies, section 8 company, high value debt listed companies. Hope that is clear. Okay, for the purpose of calculating this limit on memberships, you have to exclude the membership in the committees of private limited companies, foreign companies, section 8 companies, and high value debt listed entities. Hope that is clear. And every director shall intimate listed entity about committee positions that he holds. Okay, every director, he has to intimate to the listed entity on a periodical basis the list of all the committees and the names of all the listed entities in which he is holding the chairmanship or membership of the committees. Hope that is clear. Next, regulation number 24, which is about corporate governance with respect to subsidiary companies of listed entities. Now, there is A Limited. Okay, A Limited is listed entity. Okay, now A Limited is having a subsidiary. Okay, now the regulations with respect to subsidiary of the listed entity that we are going to discuss now. See, at least one independent director of listed entity must be there on the board of unlisted material subsidiary. Now, what is a material subsidiary? You know what is meant by a subsidiary. Okay, if a company holds more than 51% of shareholding in another company, then such company will be known as subsidiary company. Now, what is material subsidiary? If income of such a subsidiary exceeds 20% of consolidated income, or net worth exceeds 20% of consolidated net worth, then such type of subsidiary will be known as material subsidiary. Now, if the income generated by this subsidiary is more than 20% of consolidated income. Consolidated income means you should add income of both A Limited and subsidiary. Okay, let's say A Limited makes a profit of 20 crores. Okay, and subsidiary makes profit of 10 crores. Now, consolidated income is 30 crore. Now, 10 crores of that 30 crores means 33%. Okay, so subsidiary is generating 33% of the consolidated income, which is more than 20%. So here this subsidiary will be called as material subsidiary. Okay, or the net worth of subsidiary exceeds 20% of the consolidated net worth. In such a situation also, this subsidiary will be known as material subsidiary. Okay, now if the subsidiary is a material subsidiary, then at least one independent director of the listed entity, okay, at least one independent director of A Limited must be present on the board of directors of this material subsidiary. That is the requirement. Hope you understood. Okay, See, the requirement is at least one independent director of the listed entity must present in the board of directors of material subsidiary. What is the material subsidiary? If the income of the subsidiary exceeds 20% of the consolidated income or net worth of the subsidiary exceeds 20% of the consolidated net worth, then such subsidiary is known as material subsidiary. Okay. And you have to calculate this income and net worth in the preceding accounting year. Next requirement with respect to the subsidiary of the listed entity. Audit committee of listed company shall review financial statements of subsidiary. Okay, not only material subsidiary, all the subsidiary. Okay, only for the first point you need to consider material subsidiary. Okay, only the first point is applicable for material subsidiary, and remaining they are applicable to all the subsidiaries of the listed entity. Now, the subsidiary company, it will prepare financial statements, right? These financial statements must be reviewed by the audit committee of the listed entity. Hope that is clear. Next, minutes of board meeting of unlisted subsidiary shall be placed at the board meeting of listed entity. Now, the subsidiary company, the unlisted subsidiary company will also conduct its board meeting, right? Now for such board meeting there will be minutes, right? Now, the minutes of such board meeting of such unlisted subsidiary must be placed at the board meeting of the listed entity. Okay, listed holding entity. Hope that is clear. Next, now in order to do particular activities, you will be requiring general meeting special resolution. Okay, if the listed entity wanted to do certain activities with respect to the subsidiary, then the listed entity in its general meeting has to get special resolution. What are they? See, sell shares of material subsidiary leading less than or equal to 50% control, or sell, dispose, lease more than 20% of assets of material subsidiary. Now, what is this? See, the same example will continue. I'll again write that example. A Limited is a listed entity and it is having a subsidiary, and this subsidiary is a material subsidiary. Okay, this subsidiary is a material subsidiary. Now, if A Limited wants to sell A Limited's shareholding in its subsidiary, okay, now A Limited is holding company of subsidiary. That means A Limited is holding shares of subsidiary, right? Let's say A Limited is holding 70% shares of subsidiary. Now, A Limited wants to sell some of the shares out of these 70%, such that this 70% becomes less than 50%. Okay, A Limited wanted to sell shareholding in the subsidiary such that after the sale, the shareholding of A Limited in the subsidiary becomes less than 50%. That means it is losing control. To do this sale, A Limited in its general meeting has to pass special resolution. That means it has to take approval of its shareholders before it can sell the shares of its subsidiary such that it loses control over the subsidiary. Or if A Limited wanted to sell or lease or dispose the assets of subsidiary, okay, sell, lease or dispose more than 20% of the assets of the subsidiary, then also A Limited in its general meeting has to pass special resolution. Hope you understood this point. That is the requirement. However, there is exception. That means in this exceptional situation, even if A Limited wanted to sell to more than 20% of assets of the material subsidiary, or A Limited wanted to sell its shareholding such that it loses its control, it does not require general meeting special resolution in this exceptional situation. Okay, in this exceptional situation, general meeting special resolution not required. So what are those exceptional situations? The scheme is approved by court or tribunal, or plan is approved under IBC. Okay, IBC means Insolvency Bankruptcy Code. We will be discussing about this Insolvency Bankruptcy Code in the coming chapters. Okay, if the scheme of such sale of shareholding, or if such a sale of assets is approved by court or tribunal, or is approved under Insolvency Bankruptcy Code, in these two situations you need not obtain general meeting special resolution. Hope that is clear. And if it is approved, if the plan is approved by IBC, under IBC, you need to disclose to stock exchange within 1 day of resolution being approved. Okay, if the resolution plan gets approved in IBC, then the fact that resolution plan has been approved needs to be intimated to the stock exchange within 1 day of such approval. Okay, what is this resolution plan? What is this IBC? Okay, if you already know it, it is fine. If you don't know it, I'll explain them while discussing Insolvency Bankruptcy Code. Okay. Next, all significant transactions of unlisted subsidiary to be informed to listed entity. Now, the subsidiary, okay, has conducted certain significant transactions. Those significant transactions must be intimated by the subsidiary to its listed entity. Now, here the doubt that might come is, what will be known as significant transactions? Those transactions, see, single transaction that exceeds 10% of total revenue, expenditure, or assets or liability of unlisted subsidiary for the previous accounting year, then such a transaction becomes significant transaction. Okay, if a single transaction exceeds 10% of the total revenue or the total expenditure or the assets or the liabilities of unlisted subsidiary for the previous year, then such a type of transaction becomes a significant transaction. And all such significant transaction should be intimated by the subsidiary to its holding company. Okay. So those are the corporate governance requirements with respect to the subsidiaries of the listed entity. Okay. Now here you need to observe, some are applicable only to material subsidiaries and some are applicable to all subsidiaries. If you see, requirement number 1 is applicable to material subsidiary only. Requirement number 2, 3, okay, requirement 2 and 3 are applicable to all unlisted subsidiary. Again, requirement 3 is again applicable to material subsidiary only. Sorry, requirement 4. And requirement 5, it is again applicable to all unlisted subsidiary. So you need to remember that requirement number 1 and 4 are applicable only to material subsidiaries. Okay. What is the definition of material subsidiary? We have already discussed. Next, quarterly compliances. What are these quarterly compliances? See, all the listed entities on a quarterly basis, they have to submit certain reports to the stock exchanges. Okay, we will be calling them as quarterly compliances. Okay, there is a time limit for each type of report. We'll see that now. Quarterly compliances. Corporate governance report. Now, what is this corporate governance report? Basically, in this corporate governance report, it will be written whether you have complied with the regulations, all these LODR regulations or not. Okay, we have discussed board of directors, the requirement with respect to board of directors, whether that many number of board of directors appointed or not. We will be discussing about audit committee and various other committees, and in those committees there are certain requirements, whether all those requirements are complied or not. Okay, all these compliances with respect to the LODR regulations will be present in this corporate governance report, and this corporate governance report has to be submitted by the listed entity to the stock exchange on a quarterly basis within 21 days from the end of the quarter. Okay, quarter means every 3 months from April, March, June. Okay, the corporate governance report of these 3 months has to be submitted within 21 days from the end of the quarter. Okay, sorry. Next, statement of investor compliance. Okay, whether you have complied with all the regulations with respect to the investors, whether you have properly resolved all their grievances or not. Okay, regarding this you need to submit a statement with the stock exchange within 21 days from the end of the quarter. Next, shareholding pattern. That means at the beginning of the quarter, who are the shareholders and what is their shareholding, percentage of shareholding, and during the year, during the quarter, what transaction have occurred, and at the end of the quarter, who are the shareholders and what is their shareholding. Okay, this is known as shareholding pattern. You need to submit this shareholding pattern to the stock exchange on a quarterly basis. Okay, within 21 days from the end of the quarter. Again, you should also submit this shareholding pattern 1 day prior to the listing. Okay, now let's say you are going to list your shares on the stock market tomorrow. Now today you should submit the shareholding pattern to the stock exchange at least 1 day prior to the date of listing, and you should also submit within 10 days of capital restructuring resulting in change in more than 2% of the paid up share capital. Okay, at any time if you have done a capital restructuring and due to such restructuring there has been a change of more than 2% of the paid up share capital, then at every such time when a change of more than 2% has occurred, you have to submit the shareholding pattern to the stock exchange. Okay, next, quarterly financial statements and year to date financial statements. Okay, you should also submit quarterly financial statements and year to date financial statements within 45 days from the end of the quarter to stock exchange. Okay, this is also quarterly compliance. Next, statement of deviation in utilization of funds of public issue. Now at the time of raising money from the public, you will specify the objects of this amount. Okay, how you are going to utilize this amount, right? Now if you have deviated in the utilization of that amount, let's say you at the time of raising the money you told that you will utilize this money for construction of factory, but you are not using that for construction of factory, you are using for repaying debts, so this is known as deviation. Now statement of such deviation in utilization of funds should also be submitted to the stock exchange if there is any such deviation until the issue proceedings are fully utilized. Okay, that means let's say you have raised 1000 crore from the public saying you will utilize for factory. Now till the time you completely utilize this 100 crore for the factory construction, you have to submit this statement of deviation in utilization of funds to the stock exchange on a quarterly basis. Hope that is clear. These are the quarterly compliances that has to be done. Next, prior intimation of board meeting to the stock exchange. Now whenever the company conducts a board meeting, it has to intimate to the stock exchange that we are going to conduct board meeting. Now the time limit within which you have to intimate to the stock exchange varies based on what you are going to discuss in such board meeting. Okay, let us see. If you are going to discuss about proposal for buyback, voluntary delisting, fundraising, declaration of dividend, issue of convertible securities, or declaration of bonus. Okay, if you are going to discuss any of these aspects in the board meeting, then intimation of such board meeting has to be given at least 2 working days prior to the board meeting to the stock exchange. Okay, next, if you are going to discuss financial results, then at least 5 working days prior notice has to be given to stock exchange or intimation has to be given to stock exchange. Next, if you are going to discuss about notice of record date and purpose of record date, basically record date means the cutoff date. Let's say for example you are going to issue dividend. Now dividend will be issued to the shareholders. Now in case of listed entities, shareholders will be continuously changing, right? So for this purpose, you have to announce a cutoff date, let's say 5th March 2025. Now all the shareholders, all the people who are shareholders of our company as on the closing date of 5th March 2025 will receive the dividend. This is known as cutoff date. Okay, what is the cutoff date? It is 5th March in case of our example. Okay, like this, for announcing the cutoff date, for discussing the cutoff date, if you are going to discuss about cutoff date in the board meeting, then intimation about such board meeting has to be given at least 7 working days prior to the stock exchange. Okay, next, alteration in rights of the securities. Okay, if in the board meeting you are going to discuss about alteration in the rights of any of the shares, then you have to give at least 11 working days notice or intimation to the stock exchange. Note, declare or recommend all dividend or bonuses at least 5 working days before the record date. Okay, how much dividend you are going to announce per share, you are going to declare per share. Okay, that has to be announced at least 5 days before the record date. Hope that is clear. Okay, see, now let's say you have announced, you have set the record date as 5th March 2025, right, for dividend. Now at least 5 days before, that means by 31st April 2025, you have to announce how much dividend you are going to declare. Hope that is clear. Next, intimate any change in website within 2 working days. Okay, if you have done any change in your website, then the intimation about such change in the website has to be given to the stock exchange within 2 working days from the date of such a change in the website. Hope that is clear. See, all these are compliances. Okay, next, those are quarterly compliances. Now moving to annual compliances. That means for a financial year, you have to make certain compliances. Just like on a quarterly basis, you have submitted financial statements. On an annual basis, also you will submit financial statements, annual financial statements, and the audit report to the stock exchange. Right? See, audited financial statements on an annual basis has to be submitted within 60 days from the end of the financial year. Okay, to the stock exchange, the listed entity has to submit audited financial statements within 60 days from the end of the financial year. Next, annual report to the stock exchange. Okay, you have to, now after preparing the audited financial statements, you will issue annual report to the shareholders. See, audited financial statements and annual report, they are separate. Okay, in the annual report, audited financial statements will be included. Okay, along with audited financial statements, various other items will also be included in the annual report. Okay, if you see, annual report will be like this much of book. Okay, in case of large companies like Reliance Industries, Tata, okay, annual report will be this much of book. So even such annual report should also be intimated or submitted to the stock exchange before you issue that annual report to the public. Okay, see, not later than it's dispatched to the shareholders. Okay, you have to give a copy of annual report to the stock exchange before you dispatch it to the shareholders. Okay, next, changes in annual report. If you do any changes in the annual report, then within 48 hours of the annual general meeting, you have to intimate it to the stock exchange. Next, annual corporate governance report. Just like you will provide quarterly corporate governance report, you should also provide annual corporate governance report within 6 months from the end of the financial year. Okay, so that is clear. Next, moving to certain common obligations of listed entity. Now regulation 5, listed entity has to ensure that the key managerial personnel, that is CEO, CFO, CS, managing director, whole time director, these people and directors, promoters of a listed entity complies with responsibilities under these regulations. Okay, next, regulation 6, appoint a company secretary as compliance officer. Okay, the listed entity should have a compliance officer, and that compliance officer must be a company secretary. Okay, and the compliance officer has to ensure compliance with regulatory provisions. Okay, the compliance officer has to ensure that the listed entity complies with all the regulations that the SEBI issues. Next, coordination and reporting the board means SEBI. Okay, the compliance officer has to coordinate with SEBI and he has to report to the board. Sorry, board means not the SEBI, board of directors. Okay, next, monitor email address of grievance redressal division. Now grievances means if any shareholders or any investors, any stakeholders are having queries or any problems or issues, they will be mailed at the grievance redressal mail ID. So this grievance redressal mail ID will be in the custody of the compliance officer. He needs to manage it. Next, and he needs to monitor it. Next, ensure correct procedures are followed that result in correctness of information filed by the listed entity. Okay, compliance officer has to ensure that the correct procedures are followed by the listed entity. Next, regulation number 23, related party transactions. About these related party transactions, we have also discussed in Companies Act, section number 188, 184, right? In the third chapter, we have discussed. So similar discussion will be there here also. See, related party. First of all, who is meant by a related party? SEBI regulations says that for the purpose of these regulations, related party means the related party as per the definition of related party under Companies Act 2013. See, means related party as defined in section 2 subsection 76 of Companies Act 2013. Okay, the same related party definition should be applicable, should be applied here also. And apart from that, related party also includes any person or entity forming part of promoter or promoter group of the listed entity, and also any person holding equity shares of 10% or more in the listed entity during the preceding year. Okay, apart from the definition of related party as per Companies Act 2013, these two persons will also be known as related party. Okay, now for the definition of related party as per Companies Act, you can refer page number 33 of these charts. Okay, in chapter number 3 we have discussed the related party definition, there you can see. Next, what is meant by related party transaction? See, transaction involving transfer of resources, services or obligation between listed entity or subsidiary entity and related party of the listed entity. See, there will be listed company or subsidiary, subsidiary of listed company. Okay, on one hand, the transaction, one party of the transaction is either listed company or subsidiary of the listed company, and these people entering into transaction with any related party. Okay, such a transaction involves such a transaction is known as related party transaction. Okay, or these people entering into transaction with any third party such that that transaction gives, or from that transaction the related party will derive a benefit. Okay, even such type of transactions are also known as related party transactions. Okay, see, between listed entity or subsidiary and any other person or entity and the effect of which is to benefit related party of the listed entity or subsidiary. Okay, such type of transaction is also a related party transaction. Now there are certain exclusions from the related party transactions. Okay, these transactions will not be treated as related party transactions. What are they? Issue of specified securities on preferential basis. Preferential basis means to certain preferential people securities will be allotted. Let's say for example A Limited. Okay, A Limited wanted some money, 100 crore, but it doesn't want to issue the shares to public. So what it has done is, there are certain people, Mr. A, Mr. B. Okay, now A Limited allotted shares to Mr. A and Mr. B. This is known as preferential allotment, because A Limited is allotting the shares, allotting the shares or any securities to certain selected people only. Okay, if the securities are issued on a preferential basis to any related party, then such preferential allotment will not be coming under related party transaction, even though the transaction is with related party. Hope that is clear. Okay, exclusion from related party. Issue of specified securities on preferential basis. Next, acceptance of FDs by banks, NBFCs at terms applicable to general public. Now, bank, NBFCs, the major business of these people is to accept deposits, right? Now, if bank or NBFC accepts deposit from a related party, then that acceptance of deposit is also one type of transaction, right? Now, if such acceptance of deposit from a related party is at the terms that are applicable to normal general public, in such a situation, that a transaction will not become related party transaction. Okay, because acceptance of deposit is the actual business of the bank or the NBFC. Next, however, you need to disclose to stock exchange every 6 months about such deposits accepted from the related parties. Next, following corporate actions of listed entities uniformly applicable to all the shareholders. What are they? Payment of dividend. If the company pays any dividend to the related party, then that will not become a related party transaction. Okay, because just like payment of dividend to any other shareholders, it is also paying the dividend to the related party who is also a shareholder. Okay, so that doesn't become a related party transaction. Next, subdivision or consolidation of securities, even that doesn't become a related party transaction. Right issue or bonus issue, buyback of securities. Okay, all these are excluded from related party transaction definition. Okay, just a second. Yeah. Next, material related party transactions. Now, what are these material related party transactions? Material means some important. Okay, when a related party transaction will become a material related party transaction. See, if the transaction is payment with respect to brand usage or royalty. Okay, now the listed entity is having a particular trademark or particular brand. Now it has given this trademark to a particular related party, and for the use of the trademark, related party is paying certain amount. This is a related party transaction, right? Now, if this transaction individually or together with previous transactions during financial year exceed 5% of consolidated turnover, then such a transaction will become material related party transaction. Okay, in case of payment for brand usage or royalty. And in case of all other transaction, such a transaction will be treated as a material related party transaction if individual or together with the previous transaction exceeds 1000 crores or 10% of consolidated turnover, whichever is lower. Okay, let's say A Limited is purchasing from a related party. Okay, and this is a transaction other than loyalty, okay, other than royalty or brand usage fees. Now in this situation, if this purchased amount involves or exceeds 1000 crore or 10% of consolidated turnover, let's say turnover of the related, or sorry, you have to take only the turnover of A Limited. Okay, turnover of A Limited is, let's say, some 1 lakh crores. Now 10% of 1 lakh crore is 10,000 crore. Okay, now 1000 crore or 10% of the consolidated turnover, whichever is lower. Now if you see, 1000 crore is lower than 10,000 crore. So if the purchase amount exceeds 1000 crore, then such a related party transaction becomes a material related party transaction. Hope that is clear. Approval of audit committee. Now just like we have discussed in the Companies Act, all the related party transactions require prior approval of audit committee. Okay, and here even in case of LODR regulations also, omnibus approval concept is there. Omnibus approval concept means, see, the rule says that every related party transaction that the company enters into must be approved by the audit committee on a prior basis. Now let's say the company is entering into related party transactions, lot of related party transactions on a day-to-day basis. Okay, daily 1 or 2 related party transactions it is entering. Now in such a situations, it becomes very difficult to take prior approval of audit committee for each and every transaction, right? So to deal with this situation, so what the audit committee will do is, audit committee will give omnibus approval. That means it will tell the company all the related party transactions up to amount of 10 crore rupees that you enter for a period of, for a so and so period, I am approving them. You need not take any specific approval again. That this is known as omnibus approval. Okay, so this omnibus approval can be given by audit committee for a period not exceeding 1 year. Okay, up to a maximum of 1 year transactions, the audit committee can give omnibus approval. Okay, it will specify certain amount. Okay, if the individual transaction amount is up to 5 crore rupees, then you can enter into that transaction without asking my permission. I am giving omnibus approval. If the transaction value exceeds 1 crore, then you have to ask me the permission. Okay, this is how omnibus approval will work. We have already discussed this omnibus approval in Companies Act also, the same concept. See, all related party transactions require prior approval of audit committee by members who are independent directors. Okay, note, audit committee can provide omnibus approval for a period not exceeding 1 year. Next, okay, all related party transactions require approval of audit committee. Now all material related party transactions require approval of shareholders. What are material related party transactions? We have discussed, okay, with respect to payment of brand usage or loyalty, or with respect to other payments exceeding 1000 crore or 10% of the total consolidated turnover, that particular transaction will become material related party transactions. Now if company wanted to enter into such material related party transactions, it has to take prior approval of the shareholders. Okay, see, all material related party transactions require prior approval of shareholder, general meeting, ordinary resolution. Okay, next, exemption from approval of audit committee or shareholders. There are certain related party transactions which have been exempted from getting approval of audit committee or the shareholders. What are they? If the transaction takes place between two government companies, see, transaction between two government companies, then you need not take approval of audit committee or the shareholders. Next, transaction between holding company and a wholly owned subsidiary company. Wholly owned subsidiary company means 100% of the subsidiary is held by the holding company only. Okay, such type of subsidiary is known as wholly owned subsidiary. Now, if any now wholly owned subsidiary company is obviously related party of the holding company, right? Now, if any transaction is entered between holding company and wholly owned subsidiary company, then such a transaction doesn't require any prior approval of audit committee or shareholders. Okay. Next, transaction between two wholly owned subsidiary. Okay, listed entity is holding two wholly owned subsidiary companies. Okay, now if any transaction takes place between these two wholly owned subsidiary companies, then also no prior approval of audit committee or shareholder is required for these transaction. Okay, next, regulation 24, secretarial audit. See, just like statutory audit will be done by chartered accountant, the listed entities has to get the secretarial audit by company secretary. Now, what will be there in the secretarial audit? Basically, in secretarial audit, the company secretary will check whether the company has complied with all the provisions of Companies Act or not, and whether he will conduct his audit as per secretarial standards. Okay, that will be the basic objective of secretarial audit. See, mandatory for every listed entity and its material unlisted subsidiary to get secretarial audit, and the secretarial audit report has to be submitted to stock exchange within 60 days from the end of each financial year. Hope that is clear. Now, there are certain committees. See, basically we are having 4 committees. We'll discuss them. I have given a chart of all these 4 committees. We'll go through it. See, here in the top row, you will find the name of committees: audit committee, nomination and remuneration committee. Basically, audit committee, it deals with appointment of auditor. Okay, suggestion of auditor. It also helps the company in preparing financial, reviewing financial statements. It will review the audit that has been done. Okay, and it will provide approval to related party transactions. Okay, these are functions of audit committee. And nomination and remuneration committee. Basically, nomination and remuneration committee will appoint the directors. Okay, will recommend the persons who has to be appointed as a director, and it will also recommend the salary that has to be paid to the director and the top level people. Okay, that is the work of nomination and remuneration committee. And stakeholder committee. Okay, now stakeholder committee, it will deal with the issues of stakeholders. Okay, if the shareholders are facing any issues, if they are having any complaints, then those complaints will be handled by stakeholder committee. And finally, risk management committee. Okay, now with respect to these committees, number of members. Okay, how many members must be present in audit committee? There should be minimum 3 directors. Okay, and in case of nomination remuneration committee, there should be at least 3 directors, and all the 3 directors must be non-executive directors. And in case of stakeholder relationship committee, there should be again minimum 3 directors. In case of risk management committee also, there should be minimum 3 directors. And this risk management committee is there, it is not applicable for all the listed entities. It is applicable for top 1000 listed entities based on market capitalization. Okay, next, how many independent directors should be there in audit committee? There should be 2/3 of the members must be independent directors. Okay, 2/3 of the total members of audit committee must be independent directors. Next, even for nomination remuneration committee also, at least 2/3 must be independent directors. And in case of stakeholder relationship committee, at least one member must be independent director, and in case of risk management committee also at least one member must be independent director. If the listed company is having superior voting rights for any of its shares, then 2/3 must be independent director. Superior voting rights means for certain kind of shares there will be 2 votes given. Okay, generally each share will be having only 1 vote, but there will be certain special category of shares for which one share will get 2 voting rights, that is known as superior voting rights. In such a situation, if the company is having any such superior voting right shares, then such company's risk management committee should have at least 2/3 of the member as independent director. Next, chairperson of audit committee must be a independent director. Even the chairperson of nomination remuneration committee must also be a independent director, whereas chairperson of stakeholder relationship committee can be non-executive director, and chairperson of risk management committee has to be member of board of director. That means if he is a director, that is enough. Next, meeting, at least 4 meetings of audit committee must be conducted and maximum gap is 120 days. And at least once in a year meeting of nomination remuneration committee has to be conducted, and even the stakeholder relationship committee meeting also at least once in a year, and risk management committee meeting at least twice in a year. Next, quorum. In order to start meeting of audit committee, higher of 1/3 or 2 members must present, and of that at least 2 independent director must mandatorily attend. Okay, next, quorum for nomination remuneration committee is also almost same. See, higher of 1/3 or 2 members, at least 1 independent director must be present. Okay, in case of audit committee at least 2 independent director must present in order to start the meeting, whereas in case of nomination remuneration committee at least 1 independent director must present, and in case of stakeholder relationship committee not mentioned in the regulation. Okay, there is no quorum for this. And in case of risk management committee, higher of 1/3 or 2 members is a quorum, and some other points, additional points. In case of audit committee, all the members should be financially literate. Okay, they should be having knowledge with respect to the finance, and at least one member must be expert in the financial management. He must be having expert knowledge in the financial management. Okay, next, in case of nomination remuneration committee, chairperson of company may be appointed as member but cannot chair nomination remuneration committee. Now, for the company, there will be a chairperson, right? So, the chairperson of the company cannot be appointed as chairperson of nomination remuneration committee. You cannot appoint, but you can appoint chairperson of the company as member of nomination remuneration committee. Hope that is clear. Next, stakeholder relationship committee. This committee looks into complaints of investors. Next, senior executives, non-director may be member of this risk management committee. Okay, so risk management committee can have member who is not a director also. Okay, if he is a senior executive and he is not a director, then you can have such person also as a member of the risk management committee. Okay, so by this we have completed all the discussion of LODR regulation, and also we have launched Lecturepedia app. In this Lecturepedia app, you can freely solve MCQs of all the subjects. Okay, at CA final level, CA inter level, and CA foundation level, you can practice MCQs of all the subjects in Lecturepedia app at free of cost. And apart from that, you can also purchase courses of various faculties on Lecturepedia app. Okay, you can download this Lecturepedia app from Play Store. You can also find the link for the Lecturepedia app in the description. Okay, we'll meet in the next class with ICDR regulations. Until then, take care. Bye bye. See you.